Hey friends, welcome back to the channel. I'm Iggy, and I've been covering topics like stocks, finance, CPF, and everything related to growing your wealth. The Investing Iguana is ranked 8th in the 2024 Influential Tigers by Tiger Brokers, with over 768,000 reads and 53,000 likes. I've produced over 700 videos with more than 300,000 watch hours as of December 2024. I also focus on regional and world economy topics. Today, we're diving into an exciting investment opportunity that's been making waves in the transportation sector. Imagine a company that's not just cruising along in its home market, but is revving up its engines and taking the world by storm. That's exactly what's happening with ComfortDelGro, or CDG for short. Now you might be thinking, Iggy, isn't that just the taxi company I see all over Singapore? Well, buckle up, because CDG is proving to be so much more than that. DBS Group Research has recently put out a report that's got investors sitting up and taking notice. They're not just suggesting you consider CDG, they're slapping a buy rating on it with a target price of SGD 180. But why all the excitement? What's CDG doing that's got the analysts at DBS so revved up? And most importantly, what does this mean for you as an investor? Stick around, because we're about to take a deep dive into CDG's strategy, their recent moves, and why this could be a golden opportunity for your portfolio. In this video, we'll cover how CDG is shifting gears with its overseas expansion, the smart acquisitions driving their growth, why CDG's dividend strategy might surprise you. Let's hit the road and explore why ComfortDelGro could be your portfolio's next smooth ride to profits. Now, let's start our journey by looking at CDG's overseas expansion. Think of CDG as a taxi that's decided to go on a world tour, and it's bringing back some serious souvenirs in the form of profits. Back in FY 2023, CDG's overseas businesses were like that friend who chips in a bit for the group dinner. Nice, but not game-changing. They contributed about 26% of the total operating profit. Fast forward to FY 2024, and suddenly, that same friend is picking up nearly half the tab. The overseas segment now accounts for a whopping 35% of CDG's operating profit. To put this in perspective, imagine you had a side hustle that suddenly started bringing in more than a third of your total income. You'd sit up and take notice, right? That's exactly what's happening with CDG, and it's a big reason why DBS is so bullish on the company. But here's where it gets really interesting. CDG isn't just dipping its toes in international waters. It's making a big splash. They've been on a shopping spree in the UK, snatching up companies like they're bargains at a Black Friday sale. We're talking about acquisitions like A2B, CMAC, and Addison Lee. Now you might be wondering, Iggy, what's the big deal about buying some companies in the UK? Well, let me break it down for you. Imagine you're playing Monopoly, and you've just landed on the chance to buy Park Lane and Mayfair. That's essentially what CDG is doing in the real-world transportation game. These acquisitions aren't just about adding more taxis to their fleet. They're strategic moves that expand CDG's presence and service offerings in the UK market. It's like they're not just buying properties, but also hotels to put on them. But wait, there's more. CDG isn't just buying existing businesses. They're also winning new contracts. They've secured new bus contracts in the UK and even managed to renew existing ones at better margins. It's like they're not just buying properties on the Monopoly board, but also negotiating better rent from the players who land on them. All of these moves are expected to turbocharge CDG's growth as we head into FY 2025. It's like they've hit the nitro boost in a racing game, and they're about to lap the competition. Now you might be thinking, this all sounds great, Iggy, but what about the risks? Surely all this expansion comes at a cost. And you'd be right to ask that. After all, as investors, we need to look at both sides of the coin. Here's where things get really interesting. Despite all these acquisitions pushing CDG's balance sheet into net debt, they've managed to keep their dividend game strong. In FY 2024, they maintained a dividend payout ratio of 80%. That's like someone going on a shopping spree but still managing to treat their friends to dinner afterward. This move shows that CDG is confident in its future cash flows. They're essentially telling investors, we believe in our strategy so much that we're willing to keep rewarding you even as we invest in our future. But let's take a step back and look at the bigger picture. Why does all of this matter to you as an investor? First, it shows that CDG is not content with just dominating its home market. They're looking for growth opportunities globally, which could mean bigger returns for shareholders in the long run. Second, the fact that they're maintaining such a high dividend payout ratio, even while expanding aggressively, is a strong signal of their financial health and confidence in their strategy. Lastly, this overseas expansion helps to diversify CDG's revenue streams. Instead of relying solely on the Singapore market, they're now tapping into opportunities in other countries. It's like not putting all your eggs in one basket, a smart move for any business or investor. So, what's the bottom line here? ComfortDelGro is making bold moves that are transforming it from a local champion to a global player. Their overseas businesses are becoming a major driver of profits. They're making smart acquisitions, and they're still managing to keep shareholders happy with strong dividends. DBS's buy rating and target price of SGD 1.80 suggests they see significant upside potential in CDG stock. Of course, as with any investment, it's crucial to do your own research and consider how it fits into your overall portfolio strategy. Before we wrap up, I'd love to hear your thoughts. What do you think about CDG's expansion strategy? Are you considering adding it to your portfolio? Drop your comments below and let's get a discussion going. If you found this analysis helpful, don't forget to hit that like button and subscribe for more insights on stocks, finance, and wealth building strategies. And hey, if you want to dive deeper into the world of transportation stocks, check out my video on the future of electric vehicles and their impact on traditional auto manufacturers. It's a perfect complement to today's discussion. Thanks for tuning in, and remember, in the world of investing, sometimes the smoothest rides can lead to the biggest gains. This is Iggy from the Investing Iguana, signing off. Happy investing, everyone, but everyone did it.